Look at this. A 500% growth. This is the Marubeni Shockwave. Berkshire's 500% plus gain. Take a look at this chart. Over a 500% growth. Now, if this were a small speculative startup, such a jump might not be so surprising. But we are talking about Marubeni, a venerable institution with over 150 years of history. Even back in August 2020, Marubeni was already a giant with a market capitalization that, at the exchange rate of the time, was approximately $10 billion. For a company of this immense scale and deep heritage, to see its value multiply by 5 times in such a short period is absolutely staggering. This isn't just another success story in the stock market. It is a historic breakthrough for Japan's Sogo Shosha, the general trading houses. These companies were once dismissed by the world as traditional and dull, but they have staged a monumental leap forward with the world's greatest investor, Warren Buffett, as their most powerful ally. I only invest in what I understand. I'm Shosha-man. As someone who has been inside one of Japan's Big 5 trading giants for 30 years, I know exactly how this engine works. And I'm here to share that knowledge with you. Today, I'm going to pull back the curtain on what really happened behind the scenes. This is a story that only someone on the inside can tell. A story that 10 minutes is barely enough to cover. Let's dive in. For 30 years, I've seen the gritty, dynamic reality of the trading business. The kind of business where you get your hands dirty on the ground. But away from the office, I have always loved investing. I didn't just hold shares in my own company. I've held shares in our competitors among the Big 5 for years. The truth is, I've always been a massive fan of Warren Buffett, the Oracle of Omaha. I studied his philosophy of value investing deeply. As both an employee and an investor, it was frustrating to see Japanese stocks, especially trading house stocks, left undervalued for so long. I saw how hard everyone was working on the front lines, creating real value all over the globe. I kept asking myself, why isn't the market recognizing our true worth? And then came August 2020. I will never forget the shock and the pure joy when that news broke. Warren Buffett, a man I respect immensely, had chosen my company and the stocks I had believed in and held for so long. It felt like my entire career and the path I had chosen were being validated by the highest authority in the investment world. Watching our share prices steadily rise day after day was the greatest reward I could have asked for in my 30-year career. Let me share a fascinating episode that only an insider would know. The atmosphere behind the scenes. When Berkshire Hathaway first contacted us to disclose their 5% stake, one day an email arrived at the investor relations department of my company. The sender? Berkshire Hathaway. But at that moment, the reaction in the office wasn't cheers. It was pure bewilderment and skepticism. Of course, even then, foreign investors held about 30% of our shares, so we weren't being ignored by the world. However, no one, absolutely no one, expected Warren Buffett to suddenly acquire a massive stake in us at that specific timing. At first, there was a serious, really hushed debate within the office. Is this really from Berkshire? Could this be some kind of elaborate prank or a fake email? There was an intense process of verification. When it was confirmed to be genuine, the senior management was in an absolute uproar. What's truly interesting is that, at that time, Berkshire had kept it secret that they were buying shares in all 5 major trading houses simultaneously. We were in a state of pure wonder, wondering, why did Buffett shine a light on us? A unique Japanese business model known as a Sogo Shosha, which is often called difficult to understand from the outside. I am sure a similar drama played out at the other 4 houses. This quiet ambush was the beginning of the powerful relationship we see today. At that time, trading house stocks were trading well below their book value, most of them with price-to-book ratios under 1. They were incredibly cheap relative to their earning power. Buffett didn't see us as old-fashioned trading firms. He saw us as a massive, incredibly robust and diversified business portfolio spread across the globe. With 30 years of experience, I can tell you this: it is impossible to build the network of a Sogo Shosha from scratch. No matter how many decades or hundreds of billions of dollars you spend, each of these houses has a history stretching back over 100 years, in fact. For Marubeni, it is over 150 years. Buffett bought that century of accumulated time and trust. As a turnkey operation, an established empire ready to go, and he got it at an incredibly attractive price. Furthermore, Buffett's respect was not limited to just the numbers. A short while ago, a personal letter arrived. From Mr. Buffett, addressed to our CEO, he had read our latest massive annual report from cover to cover, and he wrote a message to the effect of, "My heartiest congratulations on the outstanding results of your company. Furthermore, I express my deep respect for your business philosophy." When these words were shared within the company, the morale of the employees on the front lines reached an all-time high. It was the moment we felt certain that the world's greatest investor was not just looking at a ticker symbol, but was truly investing in our long-term vision and our spirit. This relationship has now evolved from a financial investment into real operational synergy. For example, Itochu Corporation has begun the rollout of Duracell, the Berkshire-owned battery giant in the Japanese market. This isn't just a simple wholesale deal. It is an attempt to fuse Itochu's mastery of downstream operations and retail business with Duracell's global brand power to create new value based on consumer needs. The collaboration Itochu launched in 2024 with Fruit of the Loom, another Berkshire subsidiary, also highlights these deep ties. Meanwhile, Mitsubishi, Mitsui, and Sumitomo are looking toward potential large-scale joint projects with entities like Berkshire Hathaway Energy. Trading houses are no longer just companies. For Berkshire, the world's most powerful capital, they are the best possible partners to access high-potential business opportunities in Japan and across Asia. Many investors say the price has already gone up enough, but as someone who has been on the ground for 30 years and is still inside the industry today, I see it differently. What Buffett truly valued was the Sogo Shosha's ability to replace and rotate their portfolio. Trading houses have become remarkably faster at cutting off underperforming businesses and reallocating capital into new growth sectors. Buffett has stated he wants to hold these shares for at least 50 to 60 years.
In the next 50 years, and I hope he's running things then, we won't give a thought to selling those.
And his successor, Greg Abel, has publicly called them forever holdings. This means trading houses aren't just a temporary trend. They have become permanent members of the Berkshire family. To them, a price to book of 1 or 2 might just be a passing milestone. By shining his light on us, Buffett succeeded in rewriting the world's perception of us. From old Japanese firms to world-class investment powerhouses, it is truly the investment of the century, born from a bond of trust. But how exactly do these trading houses continue to generate such efficient and stable profits? In our next episode, Episode 3, we will dive into the money engine, the ultimate hybrid of investment and trading. We are not just investors who put up capital and wait for dividends or a rise in stock price. We are operators who manage logistics, organize supply chains, and accumulate profits through multiple layers of actual trading alongside our investments. This is a unique, rational, and incredibly strong earning mechanism that funds and investment banks simply cannot replicate. Once you understand this, you will see the real reason why trading house stocks are assets worth holding for a lifetime. If you found this insider perspective helpful, please hit the like button and subscribe to join me. See you in the next episode.